You are listening to chartingwealth.com for Wednesday, the 1st of November, 2017. We see stocks are up for the day. That is both the S&P 500, the NASDAQ 100. That's great, following our weekly vertical crossover going up back at the end of last week and the jumping in point on Monday. Along with TLT, the 20-year bonds, that's up for the day just barely 0.03%. That's almost as barely as it can be. And we see that gold is down 0.38%. Let's first jump into the S&P 500. Again, continuing to move up, but at less of a pace as it has over the last several weeks. We can see the PPO, the price percent oscillator, going flat. The derivative oscillator losing energy. And again, this is only the second candle of a 3-day candle with the weekly candle. I'm sorry, the 3 more days left in the 5-day candle, so only the first 2 days. And we do see that things are slowing down. The market sort of topped out right around 257, sort of where things are holding. So again, we'll continue to just watch, see where things go. The price movement is still above the weekly trend line, so we'll continue to watch things and see how it all ends up developing. We also will zoom in and take a look at the 2-day chart, see what we see there. We see that, of course, on the 2-day chart, and we're just now drawing a new candle, and we see that the first day of the latest 2-day chart is up. What we see happening, of course, again, we can see even better this sideways slide starting at the 2-day candle ending. Well, actually, we can see it topping out about the same spot all the way back on the 20th, actually. So again, we've got 8-9 days of sort of sideways slide. Don't have a crossover going down yet. Derivative oscillator's losing a lot of its energy. Price percent oscillator seems to be getting awfully close. What could be happening? S&P could be just digesting the gains up until around the 20th, and it's getting ready to just bounce back up and keep surging, but we'll keep our eye on it. As we look a little closer at the 4-hour chart, we can see that it's really getting just a sideways slide pattern. Our price percent oscillator does not work well when the market is not trending up or down, and we see that it's just sort of gone flat. So we'll continue to keep our eye on the prize, see just what's going on. Now, let's move back. We're going to go to the NASDAQ 100, up 0.38% for the day. First 2 days of the 5-day candle, strong up movement, derivative oscillator gaining energy, price percent oscillator moving up at the same angle it was in the prior week. That's looking good. As we look at the 2-day chart, we can see that it's continuing to bound up, derivative oscillator gaining energy. First day of the latest 2-day candle. Again, nice up movement as we would hope. What's going on that 4-hour chart? Well, had a little concern about it maybe petering off at the end of the prior day on Monday, where we had sort of a red down candle, but it bounced right back up in the morning and the afternoon. Looking good. Derivative oscillator gaining energy. Price percent oscillator not going up at quite the angle it was before, but still a nice strong up angle. So we'll continue to ride that pony. Now let's see what's going on TLT, 20-year bond fund, of course, confirmed down move on the weekly and the 2-day chart. We have movement that is above the 2-day trend line and touching on the weekly trend line. Weekly's losing some of its downward momentum on the derivative oscillator and on the price percent oscillator, not going down at the same angle it had been. The 2-day chart, markedly different, actually moving up toward the red signal line. We had a green spinning top, meaning a lot of indecision over this latest day, the first day of the latest 2-day candle. A pop-up as far as, and remember, Heikin Ashi in Japanese means average pace, and we've seen that average pace reflect significantly upward, busting through the 2-day trend line and moving right up on that weekly trend line. So again, if you were in a down move on TLT, it looks like things are really pulling back on you. We can see, however, at the end of the day, things did hit that weekly trend line and bounce, well, didn't push through it. So keep your eye on the prize and what's going on this 4-hour chart. Again, strong momentum up It is interesting to see a red open box candle at the end of the day. Keep your eye on what goes on TLT. Again, if we have a crossover going down on that, if it does bounce off that weekly trend line and head back down, you might have a jumping in point on the next crossover going down on the 4-hour chart, since the 2-day and the weekly are still in confirmed moves. Now that can change if there's a lot of price up movement on the 4-hour. We'll keep our eye on things. Might have a good jumping in point yet. Back to the weekly chart, our last chart for the day. Gold down 0.38%. Of course, gold is in a confirmed downward move, confirmed weekly vertical crossover since the 6th of October. We had a 2-week sideways slide through the week ending the 20th of October. And then over the course of the past week ending the 27th of October, down. So far down in the current week. Movement is below the weekly trend line. As we take a look at that 2-day chart, we can see that again, charting nicely with strong down movement. The derivative oscillator gaining downward energy. The price percent oscillator continuing to move down. Not at the same pace it was between the 24th and the 26th of October, but still nice down movement. Of course, as we look in on what's happening on that 4-hour chart, tried to cross over, thought it might cross over going up at the beginning of the day on Tuesday, but 4-hour chart, beautiful, bounced off again as we talked about. And what did it do? Well, it tagged again somewhere around that 121 mark or so. So keep your eye on things. Little concern that might be a bottom for us. So just again, keep watching that 4-hour chart. If it bounces off the 121 or so mark, something like 120.50, something like that. If it bounces off that and starts moving up strongly, you might very well pay close attention to this 4-hour chart. Jump out, take your profits on the down trade, your virtual profits, and see what opportunities abound for an up move if that occurs. Folks, that's where we are as we end the day on Tuesday, Halloween, and as we go into Wednesday, All Saints Day. Thank you so much for being with us. You have questions, problems, concerns, we're always here for you. You want to make the most out of what we do at chartingwealth.com. Here's what you do. You go to chartingwealth.com, you subscribe to our daily market review, and you print out the daily market worksheets that we have available for everyone who subscribes. We send you links to the PDF. You fill that daily market worksheet out every day. We have great training at the website and on our YouTube channel on how to use the daily market worksheet. Once a week, you fill out the weekly market worksheet. We have training on that too. And every time there's a potential for a practice trade, do the trade, do the practice trade, and fill out the trade worksheet. You will supercharge your training. You will cut your training time. Oh my word. You will huge percentage savings in learning how to really do this. If you just listen to us every day, you're getting the benefit of hearing my voice. I don't know how far that goes. Maybe it's very entertaining for you. But we want you to become a charting master. And the way to do that is to follow the program that we have outlined. And that includes using the weekly market worksheet, daily market worksheet, the trade worksheet. Practice, practice, practice. That's how you get to Carnegie Hall, and that's how you become a charting master. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.